What's going on, you guys? Welcome to Risky Ryan Trades. Today we're going to be going over the Magnificent 7, the Mag 7. We're going to go over the weekly chart update, and it's end of year, so we're going to be going over a little bit of year-to-date action as well. So all your favorite Mag 7 stocks will be mentioned in this video. You can see here I have the year-to-date pulled up. I know for me personally, my expectations for this year, I was a little off. So I knew Nvidia would just keep trucking along, and it did, 41%. So definitely was one of the best of the Mag 7. I also thought the Tesla was going to have a really good year. It didn't have a really good year. Did it even outperform the SPY? Let me take a look here. 17. It was in line with the SPY, so you could have had way less headache just being in the SPY. So that's a little disappointing. But Meta, Apple, and Microsoft also did not outperform the SPY. Even Apple and Amazon, none of them outperformed the SPY, which is absolutely fascinating. Google crushed it, right? Google had its, finally getting out from under the ChatGPT, FUD, so to speak. So we're going to dive a little bit deeper here, but before we do, here's a little disclaimer. This is not financial advice. This is for education and entertainment purposes only. Hopefully you learned something. Hopefully you enjoy it. And if you do, if you could, hit that like button. It helps the channel out immensely. We are growing. We're a little over 300 subscribers. Would love to get more subscribers. So if you've enjoyed these videos so far, go ahead, hit that subscribe button. And if you have any thoughts during this video, you can always comment below. We do appreciate that. All right. Nvidia's, I really like my chart that I have set up on Nvidia, and I want to show you why. If I zoom out like this, it tells a story. It tells a very clear story. It was, here, let me pull the Ichimoku off real quick because it does kind of clutter things. Nvidia, starting in 2000, it's always been a volatile stock, but it was holding this Gann angle for the longest time until about 2016. Then it embarked on a great journey, to get to this Gann angle, which it finally was able to do last year in 2024. It had to retest this arc, but now it's out of the arc jail. And it finally broke through in June of this year. And look how perfectly this Gann is speaking to us. I mean, I'm glad that I trusted this Gann. Everything makes sense. This might be one of the best charts that I have to offer for you guys. And so to me, what Nvidia looks like it wants to do is it wants to keep outperforming the market. If I take this right here, and I expect it to at the very least, crawl up this Gann angle for many, many years to come. If I go 52 weeks out, I'm expecting to be at about 227 a share, roughly, and a 17% return on money invested if invested today. Once again, not financial advice, but that's my expectation. That's my conservative expectation. I actually really think that we're going to get there much sooner. And just over time, we'll return to this Gann angle. And this Gann angle is growing at a 37% CAGR. Pretty good for a company like Nvidia, where it's kind of a sleep easy at night stock. Or at least it has become that way because it is so integral to the current market and the world. So Nvidia, it looks great, still a great investment. I would have liked to have picked up more right here in the 170s. It did not give us much time last week to do that, or 2 weeks ago. It actually, I think it gapped up nearly. I don't know if you can call that a gap or not, but it definitely had a big pop. If you get an opportunity, if I get an opportunity, I should say, around 177 to 179 bucks on Nvidia, just know that Risky Ryan is buying. Let's look at Tesla. Tesla has been a wild ride. As we discussed before, it didn't outperform the S&P 500 this year, which is kind of a bummer, but I think it will over time. It has over time. It's been one of the greatest investments ever for those that were in it. So let's take a look at 52 weeks out. We're flat or down. So according to my GAN, there's no guarantees. My conservative base case is flat for another year. But do I think that it's going to go down like that? Probably not. Probably once we break these all-time highs, which is what we are doing, it's going to want to get to 500, 600, 700 bucks. In all likelihood, I think if we were to get a move like that this year where it just goes parabolic upward, once it hits like 840 bucks, like that would be it. I think that it would come into the GAN arc and then come back down to this GAN angle. That would be my guess. However, I'm almost never right. So you could pretty much, why are you listening to me? No, there's just no way of knowing exactly when it's going to go up and when it's going to go down. What I do know is that if we had a really strong move and we got up into the GAN arc too soon, the RSIs would be screaming and we would be due for some kind of pullback, and it probably would consolidate within this GAN arc if such a run were to occur. But you can see I have some big numbers on here. You know, my Fibonacci extensions are at 585, 709, and 935, and this GAN level is at 835. So those are big percentage gains. I mean, if we were to get up to this Fibonacci, that's like a double up. If we were to only just get to the first extension, 585, that's 23%. That's better than it did this year. And it could happen soon. The nature of the stock is that it moves very fast. Also, if we take a look at the GAN angle, and let's go 104 weeks out, that looks a little better. That's about a 40% return, 43% return over 2 years. So still looks pretty good. But yeah, I really don't. Like I said, my conservative case is that it holds this line, but I think that we get a much stronger move than that. Google, my goodness, Google. Well, it's been on an absolute ripper rally. Can it sustain, or is this the top? Well, it did hit the GAN arc. That doesn't look very good. However, this little candlestick formation usually means it's going up higher. It'll pop up, it'll do one of these. It'll come up here, come down, and then up like that. So yeah, I think Google has more upside ahead, but ultimately I do kind of expect it to make friends with this GAN arc, and there could be some consolidation in here. Could pop out through the top and then come back in. But do I expect this thing to just keep ripping vertical? No, I don't think so. But I could be wrong. I don't like chasing. Do you like chasing? I don't. I always get wrecked. And there was a big rotation between Google and Meta. Everybody dropped Meta and bought Google. And right now, Meta looks like a much better deal. Mainly because we are underneath this GAN level, this GAN angle, which it very rarely has done in the past, only during the biggest drop downs, right? And so I think ultimately it's going to reclaim this GAN angle, and it's going to mostly follow it and be above it even. And if it were to do that, 52 weeks out, I would expect it to be up a very solid 35% from these prices. Now, would I be buying right here, right now? I don't know. I think that you're above the cloud here, and this served as support in the past. Yeah, I think Meta would be on the menu for this week. So yeah, I could see myself buying some Meta this week, just where it's at. I wouldn't be going crazy with it. I would like to see it reclaim probably the $700 level and the Tekkensen to cross back up over the Kijinsen on the weekly, just to kind of get things back to strength. But I think that's what's going to happen. I kind of expect that to happen. And if that were to happen, if we were right here and we go 52 weeks out, so we could wait, but then instead of 35%, you're looking at 27%. So still really good. And maybe if you're waiting for confirmation, that would be the thing to do. See if it can get up and over $700 and form a base at this $700 level for a couple weeks. That might be the play for Meta. Amazon. Amazon is another chart of mine that I really like. I think it's drawn really well. It's held true. Money invested today, you go out 52 weeks and you're looking at about an 18% return, which is pretty dang good when you're talking about a sleep easy stock like Amazon. And a lot of people are calling for a much bigger move in Amazon this year than over the last year. And I've been waiting for this move for years because I think it's one of the best companies in the stock market, and it's cheap, and I hesitate to call it a value trap because it's performed pretty good. It's not dragged down my portfolio by any means. It hasn't had a negative year since I bought it a few years back, but I'm waiting. I'm waiting for the rocket ship. You know what I mean? I think we all are. All of us Amazon owners are. This is, it looks like it's bouncing off of this 220 level. I think this is pretty much, this point of control is pretty well borne out. This whole area right here is thick with volume. And so I think it's ready to graduate to the next level, which would be, 267, something like that. And that's 18% higher. I think that could happen any week now, really any week now. We could do like an 18% move over the next 3 months, something like that. I kind of expect that to happen. It could fade, we could get up and over there and it could consolidate down, get back close, retest this thing right here at 250. But I think the new level, once we get up there, is going to be between like 250 and 275. That'll be the new trading range. And if I had to guess, that's probably April. Probably by April, we'll be well within that. So I like Amazon. Could see myself buying some Amazon. It's also on the buying list. Microsoft. Well, it was doing really good, and then it seemed like everybody just said, I'm going to put that money into Google. And it's just kind of faded a little bit, and it's been a little stagnant. It has been a little stagnant. Let's take a look at the anchored volume profile. So the point of control is up here at 510. I would suspect that this thing would go sideways, find some support over the Tengen and the cloud, and then get back up to this 510 level. And that would probably happen, once again by like March or April, but that's only like 6% higher. So Microsoft, not my favorite stock. I mean, it's one of those things where it's better than just investing in the SPY, I think, but there's better investments out there. And I don't know. If you disagree with me, if you want to tell me, like, if there's any Microsoft bulls that want to tell me why I'm wrong, I would love to hear that in the comments below. But I don't really have a GAN drawn. Actually, here, I think I do. I just need to go a monthly for it to make sense. Yeah, so it's just really far away from this GAN angle. So it could be, flat for 3 years, according to my model. Like, it would have to crash down really good for me to get interested in again, because I think ultimately this GAN angle will get touched. And it's just so far away from price action that I think there's a real opportunity cost that could occur. That being said, like, you can see here that it hasn't touched this GAN angle yet. So it could continue along this channel that's been going on. And let's just take a look at that. Let's draw a channel here real quick. So if it were to stay in this channel and, it touched the bottom of the channel. Okay, I got to draw this out further here. Oh, wait, no, that's monthly. No, we're good. All right, so if it were to be in this channel 12 months out is still kind of flat. So yeah, I don't know. I don't know that Microsoft is going to be going in the portfolio anytime soon for me. Apple is intriguing though. Apple is intriguing. It's up and over the Gann angle. It's inside of its parallel channel, upward channel that it's been riding for, since I graduated high school. So I still like it. It's a real consistent one. And, if I go 12 months out from here, it's 11%. I think, what's his name? Steve Weiss on CNBC. He put it really good. He's like, it's better than cash, and it's about as good as cash. Goes up 11%. You can kind of count on it. So Apple is a good, to me, it's like a good cash alternative, kind of like how I use the healthcare ETF to be a cash alternative. This isn't quite as serving the same purpose as healthcare ETF, because healthcare goes up when tech goes down, or if the market goes down, healthcare doesn't go down as much, and then you're able to rotate that money into higher beta like tech and get some outperformance. Whereas Apple tends to correlate with tech. So if everything else is down, your Apple's going to be down too. But if you want to reduce beta within the portfolio and you still want to be in tech and in the Mag 7, where you typically should be outperforming the market, I think Apple's a great stock for that. So that's it. That's my video. That's the Magnificent 7. I hope you enjoyed that. If you did, hit the like button, hit subscribe, comment below what you think about, what's your favorite? Who do you think of the Mag 7 is going to do the best next year in 2026? Until next time, Risky Ryan